Hi, Mac. Thanks for coming back again. As always, we're very excited and happy and looking forward to continue our educational trip with you. How are you? How have you been, Mac? Everything's good at your end?
Everything has been fantastic. Absolutely. Thank you for saying. And kind of just a segue from our last conversation, since we've had this first time home buyer RSP boost program in play, more than a dozen people have come forward and offered intent to be able to, take advantage of this new program. So if anybody here is listening, go check out our last video. It's also on first time home buyers, and it's going to be great to boost your down payment this season.
That's great, Mac. And related to that point, I received some calls from clients asking that they only have a saving of 5% as a down payment, but they rather have more pre-approval amount and put more down toward that. And they're wondering if there's a way to achieve that. And I said, let's take your question to Mac.
100%. You know what? Thank you for asking that because I think that's probably one of the least or little known opportunities in the marketplace is around, a down payment augmentation program, essentially around co-ownership. So, what we noticed over the last few years is that qualifying for a home has become ever more difficult. And what people are doing is they're looking to partner up essentially. So, two friends that went to college, for example, may buy a home together. Mom and dad may help their child and actually come on the application to support that. But not everybody has grandma, grandpa, mom and dad, or a best friend that they even want to live with. So what we do in this scenario is we actually look for an outside source, essentially a real estate investment company who is going to be able to assist with your down payment and improve your down payment from 5% that you have as a base level all the way up to 20% down. So I know that sounds shocking, but it's actually happening right here in the GTA. And in just 2022 alone, there was over 1,000 families that took advantage of this program and are now homeowners earning equity because of the opportunity to essentially partner up. So let's dive into a few reasons why people are using this, who is going to qualify for the program, and then give you some tools around how the actual program works. So why you would want to use this program firstly is just largely based around family needs. So the two primary needs that we're finding are, I don't have enough down payment to qualify. Simply just it's not enough to get into the home that I need. On that same tangent, it could be, my family dynamic, for example. Anybody who's, let's say, a single occupant, they can afford a one-bedroom condo, and that works for them. But let's say you have a wife and three kids. Yeah, I've got a qualification to buy a condo, but that simply doesn't do what's needed for my family. So what we would do in that scenario is we would use the a down payment augmentation program to provide that family with a lot more meat on the bone to get into a home that suits their needs. In addition to that as well is I find that a lot of business owners almost feel like second class citizens where they walk into the big green guy or the big red guy, for example, and their gross to net income obviously is not as it would be as a salaried professional, and you simply don't have enough, declared income or taxable income to qualify. Whereas through this down payment augmentation strategy, we actually have the ability to pair you up with lenders outside of the big banks who have more unique income qualifications and guidelines and are able to get families who would typically never be able to buy to the point where they can qualify and qualify quite handsomely. So that's also available as well through this program. We have A solutions as well as alternative solutions for business owners, anybody who's new to Canada. Okay. So as far as who would be able to take advantage of this program, the gambit is actually left wide open. So Canadian citizen or PR looking to purchase in the GTA. So the GTA now is actually, as far as this company is concerned, or the investment opportunity is concerned, is from the Durham region to the east, to the Simcoe region to the north, to the Halton region to the west, obviously including the downtown. And then they've actually already gone as far out as Kitchener, Guelph, Waterloo, London, and Hamilton. So a huge area that you have the opportunity to purchase in. So that aside, you need to have obviously a reasonable credit score. Anything 500 and above is considered reasonable because we have the two tiers of lending, and you have to have your own 5% down. So while there's programs that help you get to that first 5%, which we talked about last week, this week you do need to have your own 5% down, and then we would obviously then bump you up to 20%. So how it works, essentially the meat and potatoes behind the program is it's that we're looking to, ensure that you have the ability to get into a home, be successful, and begin earning equity. So what we do is we actually want to partner you up with an investment company who is going to top up your down payment to 20%. And how everybody wins is by your home appreciation. So you've got up to 10 years to live in this home. Take advantage of the market appreciation over the next 10 years, and then you decide when it's time that you would like to pull the trigger. And what families are doing is essentially getting in, building equity, selling their home, and then re-entering the market without that need for that investment assistance. So why would this investor do this? What risk are they taking on? So the investor is doing this because let's paint the picture. You have 10%, the investor has 10%. You're now 50-50 partners. So as your home appreciates, you would then get 50% of the future gains, and the investor would then also get 50% of those future gains in your home. So that's how they're protected, and that's their investment in the property. So you may be thinking, who's on the title? Do I have to ask them questions? Like whose home really is it? It's your home 100% on title. There is no other names on title. You have the ability to do business with any lender solution you choose. And also, most importantly, you have the ability to sell that home when you so choose. They can't say to you, hey, the market's hot. Let's sell half of the homes in our portfolio. It's not like that at all. So that's how the equity split works. But one thing to keep in mind as well is, you're the family that's been living in the home. You're the family that's been making the mortgage payments. You've been paying the property taxes, for example. So anyone who's listening here that understands how mortgage payments work and how new equity is earned, there is two ways to earn equity in your home: market appreciation or paying down the mortgage. So in this scenario, we've got both happening at the same time. And any new funds that you pay into your equity is yours. It does not belong to the investment company. So let's just paint a picture. You buy a house for $1 million, you sell that same house for 1.5 million. Okay, that $500,000 of appreciation would then get split 50-50, as well as you would get back all of your principal mortgage payments. And typically over a 5-year term, $50,000 to $60,000 of principal payments would get paid in. So you put in just 5% or 10%, and you're getting out $200,000 or $300,000 to reinvest on your own. This is a program that is being used widely, and even myself, and since the program has been instituted in March of 2020, I've had multiple success stories of families who have latched on and are now successful in home ownership simply because of this program.
That's great, Mac. So let me digest this a little bit. So basically, we're going to introduce a partner who's going to be a silent partner to the buyer. This silent partner is going to boost the down payment and accordingly allow the buyer to get a pre-approval of a higher amount while not hurting their credit score, because it's not going to be acting as a loan. And accordingly, they don't need to keep on paying frequent payments. And on top of that, they get to keep the house. The house is theirs, or the home is theirs, and they decide what to do and what not to do. And the partners only participate in the increase in the value of the house. And that's it. Am I correct?
Everything you said is spot on. And just to kind of tag onto the back of that is that this investment company is an investment firm, like a monitored investment company that is local here to the GTA. This is not like an individual person with deep pockets. So you have the ability to engage, and actually go through their customer journey as well. So it's an outstanding solution that everyone should take advantage of, or at least consider to take advantage of.
That seems really great. The only question that pops to mind is, what if, God forbid, prices went deep down? So I purchased this, back to your example, I purchased the house for 1 million. Now it's worth only 600,000. Do I owe this silent partner anything?
So that's actually a really, really good point. So the example that we use in our scenarios with clients is, let's say that same house that you purchased for $1 million, let's say it goes down to $800,000, and you lose your entire 20% buffer that you put in at purchase. This investment company takes the same risk that you would as an investor in real estate, and because it's not a loan, you would get all of your principal payments back. and then there would be nothing to split after. There'd be no equity to split. So the investment company walks away empty-handed. You unfortunately have sold or chosen to sell your home in a depreciated market. You've already accepted to take less to walk away with. But because it's not a loan, you owe them nothing. You do not owe that 15% to anyone. And that's part of the reason why we want to give you 10 years to appreciate those gains, is so that there's a lot more confidence around that ultimate selling price will be significant or higher than the purchase price, as well as giving you the opportunity to only invest in cities that we know you'll be successful in. So cities that have the ability for that trajectory. So we haven't gone out as far as Niagara as of yet, and beyond, simply because we want to make sure that, hey, you know what, in 5 to 10 years, you're not going to be a happy camper unless you have equity. And how do we ensure that for you? Give you the options to purchase in those cities that have that track record.
So the chit chat is, they're boosting my down payment, they're increasing my pre-approval, giving me the chance to get into a bigger property, get advantage of the upside without increasing my downside by any means. That seems very interesting. I mean, I like these guys.
It's incredible. It's incredible.
So guys, take advantage of that. As always, the first step is reach out to us. Myself, Mac, we're always happy to hear from you. Mac is going to help you with the pre-approval. He's going to help you with lining up this investor with you. You don't need to go out and find partners. He's going to find them for you, get you on the program. I'll help you find the property. We have everything in your favor. Reach out, guys. Don't take long. Thank you, Mac. I'm looking forward to our next topic as well. Thank you.
Thanks again.